Good afternoon, Mr. Aditola. Yeah, welcome. So, I saw your. Let's take a look at your assignments. The assignments you sent. Which pair did you use? Okay. Okay. So this is a bullish trend line, right? So we had the first touch here, the second touch here, and we had a breakout from here. So let's take a look at. So for the GBP USD again here, we had. You can see how the bearish structure. The trend line will let us see the recent structure of the market to let us understand, have we seen a breakout, or is the market still respecting the trend line. So this one you drew, you can see the market has been in a series of downtrend on the 4-hour chart. But what happened? We had a breakout from here, and it changed the trend of the market. You could see it changed the trend of the market. And one notable thing you have to consider is, when drawing your trend line, you don't have to force it. If you are drawing it and it's not aligning, don't force it. And this looks like a perfect show of the trend line. So the first touch was here, second touch, we had the fourth touch, and first touch, second touch, third touch, and at the fourth touch we had a breakout, we had a little retest, and the market started buying. So let's look at another one. In this one now, we had series of touches here, Euro USD daily charts, fourth touch, we had a breakout, market gave some kind of pullback to the retest zone and started selling. This one as well, the first touch, second touch, at the third touch we had a breakout, a retest, and continuation. So this as well, first touch, second touch, third touch, fourth touch, fifth, and market is still finding the reason to keep trending to the upward direction. So this is a good assignment. So you passed the support and resistance test, and currently it seems you now understand the concept of trend line. You now understand the concept of trend line. So now let's go back on our charts. So what we'll be looking at, today is time frame alignment. So with this we have scalpers, and we have trade traders, we have day traders, and we have swing traders, and we have and lastly we have position traders. position traders. So as they are like this, with this time frame alignment, there has to be a bias or direction. And here entry or confirmation. It's confirmation. Are you with me, sir? Hello, Mr. So you have to pay a very close attention to this now. So this is where you determine the kind of trader you want to be. For scalpers, scalper makes use of the 4 hour, 1 hour, they make use of the 1 hour, for direction of the market direction. So this has to be market direction. So scalpers make use of the 1 hour for market direction, and they make use of, okay, let's look at the 4 hour. One hour or 15 minutes for direction. So and they make use of 5 minutes or 1 minute for entry. So for day traders, they make use of the D1, the daily, and the 1 hour. For buyers and market direction. So for entries, they make use of 15 minutes or 5 minutes. Swing traders, they make use of the weekly and 4 hour. Weekly and 4 hour for direction, and they make use of weekly and daily for direction, or even the 4 hour for direction. And they make their entries, and their entry could be 4 hour or 1 hour for entries. So yeah, position traders, they start all the way from the monthly charts / weekly, monthly, weekly, and daily. Position traders, and they make their entries on D1 or 4 hour. So now let's look at the direction of this trades, of this alignment. So for scalpers, we can see scalpers start their direction, their market direction on the 1 hour. The bias here means they want to know the overall range of where they are trading to. Sometimes they might make use of the 1 hour, and sometimes they might make use of the 15 minutes. So if they are able to get their bias, the 1 hour here will serve as the bias, the 15 minutes here will serve as the market direction. So they want to make their entry on the 5 minutes and the 1 minute. They want to make their entry on the 5 minutes or the 1 minute. Now let's look at how scalpers take direction from this. Let's look at EuroGBP for example. Let's go on the 1 hour charts. So the scalpers, if they want to make their trade, what they want to do, it could be support and resistance. Let's do support and resistance. So are you with me, Mr. Adetola? Hello, are you with me? Okay, so for scalpers, they start their analysis on to look at the market direction on the 1 hour. So once a scalper is able to identify a bias or a market direction, so what do they want to do? They want to go ahead to the 5 minutes chart. So on the 5 minutes here, what do they notice? They notice the market is currently reacting to a breakout from a resistance and now currently at what? A support. And they've seen that as we had a breakout, we had a retest, and market is going up. So they want to quickly come here and take advantage of what is currently going on the chart. So a scalper that understands a market structure knows we've had a lower low here, we had a lower high, lower low. So currently they are looking forward to take advantage if the market comes here. Once the market comes here and breaks through this zone, we'll be looking to have what? What are we having? Higher high. That means we've had a break of structure. We had a break of structure. So with this higher high, what are we expecting? We are expecting market to give us an higher low to create a new higher high. So in this regard, a scalper will be looking to come and make their entries here. And once market reaches there, they will place their entry. They will place their entry here, and their stop loss will be below here, and they will target the nearest swing high, or they will be looking to make at least 1:2. You could see they will be looking to make at least 1:2. Once the scalper makes an entry here, once 1:2 has been secured, they are out of the trade. Do you understand? Staditola, do you understand? Yes, so now sometimes that could be another way. So a scalper sometimes might not even wait for all this. So what they want to see is a scalper that understands price actions. Once they notice price is around this zone and they are seeing, what are they seeing? They are seeing some kind of price action. Now in this regard, they've seen a morning star, and they are not just making a decision because they saw a morning star, but they are looking at it like, okay, they are seeing a morning star at a breakout, at a resistance turn support, and we've had some touches. We had a first touch at the previous one, and we are anticipating the third touch here. So a scalper, after this closure, they will be looking at the price action that is happening. Okay, we've had a morning star. What are we currently experiencing here? We've seen a pin bar, we've seen a spinning bottom. With that spinning bottom, a scalper currently will make a decision here. They've placed their entry. Their stop loss can be around some kind of wicks here, and they will be looking to profit at least 2:. And look, they've secured it. They are out. 2:, is they are risking 100 $100 to profit 200, they are out of the market already. If they are looking to profit 1:3 or 1:4, they will be looking ahead of the price, and currently the market is still eventually going to the direction. You understand? But a scalper will always look to at least profit 1:2. 1:2 with this, they are out. They can now be waiting for that move we are expecting it to do in order for it to continue its upward direction. Is that clear? Is that clear? So now that's how a scalper trades. Now let's look at how the day traders. Let's look at how day traders makes their decision. So day traders in this regard, they will start their analysis on daily. They will start their analysis on the daily. Now let's look at how day traders, they will check their analysis to see the bias of the market on the daily, to see what is happening. Now day traders will start analysis with the daily chart, looking at what is happening on the current candle. They want to make a reference to the previous candle that forms, and if you look at this previous candle, it's looking more of like what this last two previous candle. It's looking more of like a piercing, a dark cloud. So once a day trader sees this, they want to head over to the 4 hour. They want to head over to the 4 hour. So I was meant to put a 4 hour bias there too. Yeah, a 4 hour. 4 hour. They want to check the 4 hour. So once they check the 4 hour, they are still able to identify a level, same as how a scalper was able to identify. So on the 4 hour, what do we notice? We notice we had a breakout of the 4 hour. A day trader will quickly look, okay, wants to capitalize. A day trader has noticed a breakout, and currently we are retesting this breakout. So if trade trader will head over to the 15 minutes chart, what do we notice on the 15 minutes chart? A day trader will notice we've seen a good piercing line. You can see what kind of pattern is this? This is a piercing line indicating buys from the breakout point. We had a breakout and we are retesting. So a day trader will enter this position after the formation of that piercing line. Stop loss will be below, and is currently in trade, targeting at least more. At least there's a swing high here, might be looking to target 4 ratio. So a day trader in this regard, sometimes it might take more than 24 hours for the price to reach this point. A day trader can still consider to hold to the following day. But for us to differentiate between a day trader will be looking to at least look more than 1:2. But within that day, a day trader must always have a reason to either go out of a trade or hold it to the following day. Is that clear? So in this regard now, day traders will always target swing points. In this case, you can see this is like a recent swing point. So a day trader will make an entry here, targeting this high. So there's a possibility if market reaches this high, we might still see what? A sell back. So a day trader will be looking to look for the nearest swing point in order to capitalize on and go out of the market from. You can see, but with a scalper will have been looking to target at least 1:2 in lower time frames, just like we did earlier. Do you understand?
No, no, sir. I don't understand this concept for this trader.
So let me come back.
On okay.
So for a day trader, they want to look at the bias. Let's just say they want to start their bias on 4 hour. So if they are using the 4 hour chart, they will look at the recent price action from the market, and you could see we had a recent price action from the market, and the structure of this market, this place was serving as our resistance zone, but eventually we had a breakout and retest. This is the 4 hour chart. So if you are using the 4 hour chart, the day trader will go all the way to the 15 minutes to look for entry. The entry they are looking here, they want to look at candlestick confirmation on the 15 minutes to make an entry. Do you understand? Yes. Uh-huh. So, so
On that
yeah,
you said the market is coming down.
on the
On this
4 hour. No, yes. The thing you can derive from here is we noticed we had a breakout, and we let us understand once we have a breakout, what we do, we will surely have what? A retest. So the reason why a day trader is capitalizing on this is because of this retest. You understand? It's because of this retest. A day trader is not just saying, okay, I just want to consider a trade anyhow. No, we should have a reason to make a confirmation, and this was the reason we had a breakout and a retest. But before that, we are making a decision earlier when that market fell. Are you still with me? Are you still with me, sir? Are you still with me?
I'm just sorry.
Uh-huh. You could see the reason why on the 4 hour we are anticipating market will give us a retest, but a day trader will have entered early, seeing earlier price action on the 15 minutes. And what's the earlier price action we are seeing? We are seeing a piercing line, and we decided to enter with this piercing line. Our stop loss is below this week's. So this is how a day trader will have capitalized. Like, on the 4 hour we will be waiting for the market to give us some kind of bullish rejection, but a day trader will have entered using the lower time frame price action confirmation candle. Do you understand now?
I understand, sir.
Uh-huh. So now let's check the. So we've done scalpers, day traders, and now let's look at swing traders. Swing traders, we know with swing traders, they want to start their analysis from where? From the weekly chart. They want to start their analysis from the weekly to know their bias, their direction. And with the recent weekly, a swing traders will highlight this level, and also highlight a level here. Here you could see we've highlighted 1 2 here, being that this place was serving as some kind of resistance. Market came, it came back into it. So what market is currently doing inside it is ranging, but eventually we've had a breakout from it. So a swing trader has already identified some kind of level on higher time frame. So what does he want to do? He wants to bring out, he wants to understand and take advantage of the current level of the market. On the 4 hour chart, he will bring out another level again. You can see he has brought out another level, which is this place here. When this level occurred, we had a breakout, and with that breakout we know always we will always have a retest. So a swing trader will have capitalized and makes his entry at the week's rejection, which are this week rejection we are seeing targeting higher. You can see this is how swing traders will have capitalized before the movement of this market. You can see the reward ratio is always high. You can see these are for swing traders, or sometimes they might decide to make an entry on the 1 hour. It's still the same concept. You see, we had a breakout from this range, and that when that breakout occurs, we eventually have, see how long it took for the market to give us a retest, but it eventually did. When that retest happened, we started buying. So this is how swing traders will have waited in order for them to make an entry.
Boss, good to see you physically. I see you on TikTok. I'm actually here to make a inquiry about TikTok, to know the time that TikTok live stream is in.
So this is
There's an online class.
so this is how it will have started. You can see. So swing traders will have taken advantage here. They don't need long analysis or checking the 15 minute. Swing traders won't go below the 1 hour. Even they won't go the 1 hour for entry. They won't go below 1 hour for entry. Because what they want to be seeing is they want to be seeing some kind of, by this time you should know what happened on the higher time frame supersedes what is happening on the lower time frame. The lower time frame might be giving us some false candles, but for swing traders, they know that going below the 1 hour, the 4 hour is something they can't put into consideration, because once they are seeing their price action candlestick formed, they want to know that it's not false, it is a confirmation. So they are making their entry straight away. Do you understand? So position traders, these people, their portfolio is mostly large. For position trader, they will start their analysis on the monthly or even 3 months. There is an option that gives us 3 months range. I should have put that. See, they will want to look the overall direction. These people hold trades for months, years. So once they are able to identify, now they check the monthly. They normally capitalize on the higher time frame of the monthly to know their buyers. You can see here, position traders will be anticipating that this place has been serving as some kind of rejection on the monthly chart. First, same concept. First, second, look at how on this one now let's go ahead to the daily and the 4 hour, which they will normally use for entry. We are coming all the way from the, you can see a position trader has already identified the monthly chart. Even at the weekly, they can make their entry here. At the weekly, they are seeing rejection. The weekly is already giving them some kind of morning star, and they are holding. First touch, second touch, same concept. And if they are coming down to the daily, they want to make an entry on the daily. They want to be seeing some kind of confirmation here. And if you look at what they see as confirmation, we had a huge spinning bottom on the daily chart. So position traders, they've already made their decision. They are in already. They are in already. They hold trade for long, and once they make their entry, they want to look at the opposition of what the monthly is saying. You can see, and where they will be targeting extremely higher positions, because they know this rejection that is coming up from the monthly is going all the way to this top, because nothing seems to be holding this market. The overall direction is bullish. Higher low, higher high. This is serving as some kind of higher low to continue to give us a higher high. So position traders will have made that entry here, holding and trailing. So do you understand now? Do you understand? You could see. So in this regard, the reason why we are doing this is for you, because there will be a point whereby you want to consider the kind of trader you want to become. Do you want to become a scalper, a day trader, a swing trader, a position trader? But there's something you have to keep in mind, that these two, from year to year, maybe you have low capitals, you can consider this. But if you are considering being a swing traders or a position traders, they trade in thousands of dollars. You understand? They trade in thousands of dollars, because in that case, because they know if the market gives them some kind of drawdown, they still have enough capital to save, because their stop losses are always huge. A swing traders can be risking at least maybe $2,000, $3,000 on a trade, looking to profit higher. A position trader can be risking $10,000, $50,000, $100,000 on a trade to profit higher. So these people here, what they trade is, the capital they trade with is high capitals. So for retail trader that doesn't really, a low retail trader that doesn't really have that capital, should stick with this. $1,000, $500, $2,000 are still categorized under being a scalpers or a day traders, because this one here will be looking to make a 1:2, looking to double an $100 to, looking to risk $100 to profit $200, 1:2. This one as well can be looking to risk $200 to profit $400, $500 to profit 1.5 or 1,000. So this is how these traders react in the market. So do you have a question? Any question?
No question.
So have you created that HFM account? Have you started practicing on demo?
I'm still having it to
Because
I want
you have to
to
start.
log in the account. So I'm trying to put my account there. They send me some notification, what's it called, registration code. I will put it and begin the class. I don't know what.
Okay. So because by now I
I
believe
want to start that demo.
you have to start it, because by this time you need to figure out what works for you and the kind of trader you have to be. So it is true, through your this thing, what's it called, through your demo, you'll be able to understand the kind of trader you want to be. So I think by now you should be back testing. What I expect now is, at least you should be asking me, you did this, it's not doing, what's the solution? Because the more you back test yourself, you won't be the one to trade for you. You will be the one to figure out the kind of trader I want to be. Do I want to be a supporter resistant trader? Do I want to be a trend line trader? So you will want to know the kind of trader you want to adopt. So by now I expect you to start, at least. It can be, even though you have some peers whereby you can just go on any peer, challenge yourself. Okay, you want to analyze it, you want to know the direction. So even if you do your analysis like this, and for example this Euro JPY, as we did the analysis, we expect the market to buy, and if the market eventually hits TP, you yourself, you'll be proud of yourself, that you'll be happy that okay, I'm improving. So that's how you, not just by looking or coming to class, and you have to exercise, take a test of what we've been teaching you. So by that you can also grow as well in knowledge. Is that clear, sir?
Yes, sir. And sorry, sir, I have a question.
Okay.
It's not concerning the
Okay.
I go on what is it called? That TV.
Okay.
I talked about types of how to identify the technology
Okay.
possibility. So I come across something about psychological based.
About what?
About psychological based.
Okay. Yeah.
So I want to ask, is it relevant or it's not that okay?
Psychological level.
Yes.
It's still the same thing. Don't forget the English the ChatGPT couple for you. The what I did here
Yes.
is a psychological approach. Why? Because I know what the market here is doing is this place is serving as some kind of resistance before. A market came is a psychological approach because if you are trading support and resistance, you are using an approach of what have happened in the past in order to predict what will happen in the future movement of the market. It's still the same thing, forget the English. I used my approach of how I understood price actions. We are using if we don't use a psychological approach in your trading, that means you don't really know what you're doing. One of the psychological approach is the formation of candles we are seeing too is an approach. This place now was able to see what the candle is telling me. I'm using a psychological approach to this because the reason why it gave you like that is some people they don't understand price action. Once they see a support, they break out. They don't know what to see to make a confirmation. But you, at the other hand, you understand price action. You understand a psychological formation behind every candlestick pattern. So you are using a psychological approach to make your decision. So that's just it. It's still the same thing. Don't get confused.
Okay, sir.
Yeah.
Thank you, sir.
All right.
Oh, is there another demo account you can recommend aside from HFM that since I'm having it with my digital?
Okay. I won't say. I don't. Maybe you can just try out another broker for at least just to be practicing. You can open an SNS for now, just to be practicing. But if you want to join our signal group or our group, you have to open an HFM account. But you can go ahead to open an SNS because by now you should be back testing. You should be trying to test yourself or what you've learned. You understand? So we can know where to improve on and where to work on. You understand?
All right, sir. Thank you.
All right. So that will be all for today. So in the next class we'll still do some things.
All right, sir.
All
Thank you.
right. All right.